Hello, this is Kim Watson of Easy Trader. Welcome to my special edition of my weekly review of the key economic news releases. It's become a special edition because obviously the news that occurred on Thursday wasn't programmed to occur on last week's update. No one knew about it until it was actually released, so it surprised a lot of people, and in fact the banks themselves. Now, someone did ask me whether the banks already knew about this on Thursday when it occurred, and they'd have known ahead of time, but obviously they did, because the likes of Barclays and Citibank, I understand, have lost significant sums of money, so the usual rumour mill obviously didn't get out there. Yeah, there's all sorts of conspiracy theories that come out when this sort of thing happens, and one of the questions was, with the quantitative easing ahead, did the Swiss National Bank know more about than the analysts do about the expected figures? Again, this is, as I say, it's just someone's view that may be the case. The probably the more likely answers to this situation is yes, partly they know there's more downside coming in terms of the quantitative easing, but they've got a belief that the peg and because they've been pegging it to the euro's moved down significantly over the 3 years that they've pegged it, and is now at more sort of sustainable levels, or what they see as sustainable levels. They don't particularly, I wouldn't have thought, want to be going much lower, because it then increases inflation significantly, and what they'll be seeing as they move ahead now, it will be effectively more beneficial for the Swiss public, not necessarily for the companies, but certainly for the public. But the situation is, of course, there were certainly significant inflows of Swiss francs going into Switzerland in December, 10 times more than the normal amount. So there were signs, effectively, of a lot of stress and strains going on to the Swiss National Bank, so they were taking a lot of pressure. Now, they took this pressure back in, I believe it was early 70s. I think it's Jim Rogers had written an article on it, and I think his book predicted in 2013 there'll be a come-uppance when he wrote it, the section within that. Now, I think the comeuppance is here effectively. They could lose, or could have lost significant, or could have cost the Swiss a significant amount of money to keep on trying to hold the Swissy at a lower figure than it should be justified. So that in itself was probably the significant reason they lost billions back in the 70s by trying to hold it down. And I think they'd probably find it hard to justify to the Swiss taxpayer of losing billions more. So probably now was the time, but the obviously the knock-on effects we know. Now, looking for the week ahead, of course, we've got the ECB quantitative easing expected to come out on Thursday. Now, there's been enough flagging that this may occur. There's been talk about it. There's been plenty of rumours. There's been individual members speaking about it. They wanted it to be priced into the market, and it could be well priced into the market. There's an expectation figure of 500 billion. Now, this may be more. There's rumours, and of course I've been reading different comments in the last few days where it could be as much as 750 billion. So whatever you believe, but the thing is, those comments weren't just one person telling me. It's obviously out there. So analysts are looking for the figure of 500 to 750 in the main. I think if it was as much as 750, we may see the euro sell off some more. I think the euro sits exceedingly weak where it sits, because I don't even think the quantitative easing is going to be a significant great deal for the euro regardless. Obviously, if it comes in at 500 billion, and that's the figure on Thursday, we could actually even see a rally. It's just sort of the buy on the news situation, or sell on the news. We could see that occur on Thursday, but let's not second guess what happens. Now, the knock-on effects of the Swiss National Bank action, well, I've discussed those already, really. We've seen them, but of course the brokers are the ones being hit, and of course banks. It's not just the brokers. Now, how safe is your broker? The broker that we discuss, ETX, we had an email out directly from them on Friday, which I've read to a lot of our clients, and I know they've sent an email out to all of their clients themselves, which basically said they're sound. And the thing behind brokers here It's funny. I was thinking it this morning, and it's sort of. I got back, and a colleague of Charlie and mine had written and sent some notes from a market maker that he'd read. But it's quite interesting, and basically, when you look at safety within a broker, a lot of brokers that are out there. There's sort of two categories of broker, and there's sort of two categories of client they have. A lot of brokers, and there's increasingly some spread bettors, were going on the fact of the direct access, and this really fitted a direct market access, and this really meant that the clients were going straight out to the market, and a large bulk of their market they wouldn't be sitting with any risk there. It'd be straight into the market, allegedly. Suggesting they wouldn't have any risk is another matter, really. But then you've got the B brokers, which will be just as these brokers themselves will have their A and B book clients, as they'll be taking the other side of the trade. Now, is this a bad thing? Well, not really, because someone has to make the market, and effectively the spread bettors themselves are making the market. And people have asked us this in the past: is it safe to, is it a good thing, and isn't direct access better? Well, there's swings and roundabouts, and you're just seeing one of the swings and roundabouts at the moment, because a lot of these brokers out there, which have certainly they have more sophisticated traders with them as well, and it's in the main, because large sophisticated traders are not really interested in spread betting. They're much more into direct market access and doing their own thing, and they cut the spreads as small as possible, etc. And they'll be making different decisions, and probably looking at currencies that we wouldn't trade as more retail brokers. I mean, certainly Charlie mentioned it on Friday, the fact that neither him nor I, we don't trade the Swissy. I haven't been trading the Swissy. One of the reasons is it's just been pegged to the euro. In the past, even when it wasn't pegged, for me, there wasn't always great opportunities. I know some people liked it and whatever, but for me, it was just one of those currencies I'd prefer to be trading the euro, because it has the liquidity on the euro is huge. And when you look at the liquidity and the problems that were seen on last Thursday with the Swissy, it was major liquidity problems, because banks basically just shut down and stopped dealing. So there wasn't the liquidity there to be dealing with what was happening at the time. So massive problems there. Now, getting back to the brokers here then, so the spread bettors, many of the spread bettors would have found it easier. They've got both sides of the market. They also, as their clients are running into margin, they're calling, they're cutting and doing things. They have agreements with their clients that they'll do things at certain levels. Obviously, they can't mitigate for what's happened here, and there'll be some people worrying them. And as with the A-class brokers, effectively, there'll be people owing them a significant amount of money. It's not FXCM, for example, that's lost the 250 million. It's the 250 million is lost by FXCM clients. But what FXCM have to do is they have to stand the rest of the amount of money to their liquidity providers, to the banks that provide the liquidity to FXCM. So they're having to foot the bill in the meantime and then go chase their clients for it. So obviously it leaves them a massive shortfall. Now, a couple of things to be bearing in mind: the majority of our brokers, and certainly the likes of ETX, they hold segregated accounts. So your money, wherever you should be, providing you've got a broker that's got segregated accounts, you're going to be completely safe. Because even with Alpari, which went into solvency, the problem is, as I say, Alpari have become liable for the debt to their liquidity providers. Now they've got to go chasing, and the solvency, the people coming in have got to come in and go to those clients and get the money, so to pay the bills effectively. As I say, with spread bettors, that doesn't happen so much, so a bit of an easier situation. So hopefully that explains that a little bit. In terms of, are you safe? Well, you can, I mean, as I say, probably if you're likes of many of the brokers, they've sent out emails. If they keep him very, very quiet, your money is probably still safe, but it's segregated, but the broker themselves may be struggling a little bit to work out exactly what their exposure is. I mean, obviously, it's with some it's going to be very much easier to do than others. but that will occur, and I'm sure we will see some more fallout from this. Now with FXCM, just in terms of news, there is a company that's standing them a 300 million pound loan, so they've got a significant loan put in place now, which quite an interest rate, of course, but they've got the loan sitting there, so it will help them out and keep them liquid and complying with the rules of being a broker. Okay, so I've talked about the big stories. Let's just run through the week a little bit more. We do have the Bank of England minutes later on, but let's go through the week as it is. Now, Monday, I think we'll probably hear more fallout, etc., from this news events. You've got the US bank holiday in the afternoon, so I expect the volatility, or more likely the liquidity rather than the volatility, may ease up in the afternoon. Moving ahead to Tuesday, we've got the German ZEW economic sentiment. This really creates very little in the way of volatility. It comes right down on my index, so it's not something I'd be trading, but I'd be aware of it at that time. Moving ahead to Wednesday, in Japan, we've got their monetary policy statement is due out. They're expected to be continuing to ease, extending their encouraging their lending program. This is expected to be discussed and may come out in their statements. Not sure what time to be announced is the answer on that one. Can come out any time. Moving ahead, then at 9:30 we've got the employment report and the Bank of England minutes coming out at the same time, so this can create quite a bit of volatility. I do normally try and trade the employment report, particularly we'll be looking there at the numbers in terms of the wage inflation effectively there, so looking at the average earnings. So key part of the employment report, and that's what I'm sure the Bank of England the committee will be looking at. Now, the minutes themselves, if we see a change to the voting, this could see a bit of weakness in the pound. I say change to the voting, changing in terms of moving back towards where it was before 9-0 as opposed to 7-2. So that will obviously be quite key at that point. But then you've got the contents of the minutes, etc., which we read through. So volatile time after 9:30 onward. Moving ahead later on in the day, we've got the Canadian rates statement and report. It's not something I normally trade, but it will create volatility in the afternoon, I'm sure, for the Canadian dollar. Moving ahead to Thursday, and really the big figures and big data comes out at 12:45, and followed by the press conference at 1:30. I should imagine the statement at 12:45 will cover what the bones of it, and then Draghi will speak about the content at 1:30. So could be quite a big day. I'm not going to second guess. We're not in the second guess business. We'll just have to look at how the market moves, but certainly I'll be looking to try and trade some of this event. And then Friday, we've got the Euro and German flash manufacturing and production figures. These haven't moved the market for some time, and I'll be surprised they moved the market much even this month. We've had some quite good figures come out relative from the German figures, showing signs of growth, etc. But even with these coming out particularly good, you see 10-15 pips. But again, volatility around 8:30, so to be expected. Later in the morning, we've got the UK retail sales at 9:30. This moved the markets about 30 pips last time on a really big positive figure come out. And so I think the expectation is for interest rates to stay low for a long time. When you're looking at these numbers, we're looking for key growth figures which will effectively push the need to increase interest rates sooner rather than later. But what we're seeing with inflation at the moment makes these figures like retail sales a little bit less important, which in effect reduces the volatility around that time. But we'll see how that rolls. Okay, and then in the afternoon, you've got the Canadian inflation and retail sales figures coming out 1:30. Again, not something I trade, but it's just to make you aware of the volatility. Okay, been a bit longer than normal because I wanted to discuss the situation regarding the Swiss National Bank and the brokers, etc. Hope you find this useful. Normally, if you want to watch these, you can go to the calendar on the Monday. Charlie normally reminds you, there's a little link on his update, his Monday update. but you can go and get the details from there and see that it's normally a 3 or 4 minute update on a Monday. Okay, have a great one. Bye for now.